Welcome to HUD's Housing Choice Voucher Overviews. This video will discuss the basics of fair market rents. Fair market rents, or FMRs, are gross rent estimates that include the base rent, as well as essential utilities. The rent estimates being reflective of local market conditions, square footage, and property amenities. In other words, the FMR for a specific geographical area is the amount that a tenant would need to pay the monthly rent plus utilities of privately owned, decent, and safe rental housing of a modest nature. In the Housing Choice Voucher (HCV) program, the FMR is the basis for determining the payment standard amount used to calculate the maximum monthly subsidy that the PHA will pay. FMRs are required by regulation to reflect the 40th percentile rent of units occupied by recent movers, which means that 40% of recent movers had rents below the FMR and 60% above. This means that HUD's calculation of FMR is slightly lower than the median prices in the area. HUD estimates FMRs on an annual basis using the most recent available data on recent mover gross rents from the Census Bureau's American Community Survey or other sources identified in the latest FMR federal notice. HUD's calculations include forecasting rent inflation to make the FMRs as of the fiscal year for which they are in effect. You can always find the latest FMR data at www.huduser.gov. Draft FMRs must be issued 30 days before the October 1st effective date. Typically, HUD issues these in August through a federal notice. In this notice, HUD provides an explanation of the methodology and offers an opportunity for public housing authorities or other interested parties to request a re-evaluation. If a PHA re-evaluation is not requested, the PHA must use the new FMRs in setting payment standards by January. Although FMRs may reflect rent in a low to moderately priced dwelling unit, it is important to recognize that HUD FMRs are not intended to indicate that units are available at that price. The availability of units is dependent on local factors such as the supply of units, vacancy rates, landlord participation in the HCV program, and recent market trends that may not have been captured in HUD's FMR analysis. It is critical that PHAs make their own program adjustments to account for local factors in maximizing utilization of HCV program funds. An initial step that PHA should take is adjusting its payment standards based on local conditions. Payment standards are the maximum monthly housing assistance the local PHA will provide. PHAs typically set their payment standards between 90% and 110% of FMR, but may go above 110% with HUD approval. To learn more, please refer to a separate payment standard video for more insights. We know that the rents in some markets may vary significantly from zip code to zip code. In response, HUD issues small area FMRs. PHAs will often adopt these small area FMRs to improve the availability of units and expand neighborhood access to voucher holders. To learn more about small area FMRs, please check out our other video on this topic. In addition to payment standard adjustments or small area FMRs adoption, PHAs may consider establishing success rate payment standards, exception payment standards, or expanding the use of project-based vouchers in order to address local environment and tenant needs. This concludes the presentation on HUD's fair market rents. To learn more about the HCV program, please visit www.hud.gov/HCV.